The Rational Root. How you doing? Thanks for joining me today. Can you give us a little brief introduction into who you are and why you're such a big, famous, and influential person within the Bitcoin space for any of those who maybe haven't had the pleasure of getting to know your content?
Thank you so much, Matt, for having me on. It was great to meet you also in person finally in Vegas. I've been a follower of the Bitcoin Magazine Pro channel as well, and so it's cool to be on here again. I've worked so much with Bitcoin Magazine in the past. No, so my name is the Rational Root. I go by the Rational Root on Twitter and on Noster. I do on-chain and cycle analysis. I have my platform, the Bitcoin Strategy Platform.com with like a Substack newsletter, so bitcoinstrategy.substack.com. And I try to just navigate the Bitcoin market from an on-chain and cycle perspective. And, I think I'm pretty well known within the Bitcoin community, maybe for the spiral chart as well, one of the more famous charts. We'll get into some of those, the 3D version as well. And so I'm excited for this talk. Thank you so much.
Yeah, 100%. So obviously, like you said, a great on-chain analyst within the space. And I know we maybe have slightly competing content to some extent, but I love just chatting with other great minds in the space like yourself and any other on-chain analysts as well that we've had in the channel and will have in the future, I'm sure. It's great to just have these kind of open discussions and try and share ideas, bounce off, and just try and clarify and demystify a lot of the data that we look at every day to our general audiences. So first and foremost, we'll get straight into it. What's your current outlook on the Bitcoin market? Do you think that we're in a bullish spot right now? Do you think that there's potentially a double top incoming? And what charts are you looking at to kind of help understand the market a little bit better?
Yeah, to see like from where we stand from an on-chain perspective, I tend to look a lot at the short-term holder cost basis, and so we're still above the short-term holder cost basis, which for me means bullish territory. So I think there's still a lot of room for more upside. And so if we look at the first chart here, so I show here the short-term holder cost basis. We're actually starting here in 2020. We're showing the previous bull market and compared kind of to where we are now. We had a bit of like two, like maybe like a bit of hype phases in the cycle where we had the ETF approval and then the election where we made like all-time highs, and we're back at an all-time high. We just a month ago. We have a bit consolidating since. But yeah, to me, those patterns look very similar. Like I've been talking a lot about that. How similar the structure was of those two up moves that we saw in price, and which so far has been slightly different to like the previous cycle. So, for example, if we compare the 2020 cycle, we had really like a strong parabolic move up. And we didn't have like as much of a structured move that we have seen so far, and so potentially that is due to institutions, and we'll get into that in a little bit. But before we do, so we're currently the short-term holder cost basis is actually sitting at 98.3K, and prices more or less at 105K. So we're still above. We're not really overextended from like the short-term holder cost basis. If we look at it in terms of standard deviations, which is the bottom part of this chart, we're only like 0.25 standard deviations above the short-term holder cost basis, which is not a lot at all. And if you think of, for example, the previous cycle top of the previous bull market, we reached 4 standard deviations above that short-term holder cost basis. And so to me, that kind of shows like, okay, we haven't reached like full potential yet. There is a lot of room for upside. Although there is also the question, is it like institutional adoption changing the cycle dynamic? And so we'll get a bit into that. I don't know if you have any questions so far.
No, it's all sounding good. We actually have, so just for anyone that maybe isn't aware of the short-term holder cost basis, this is the pretty much average accumulation price of new market participants. So I believe it's 155 days or less, and very similar to the chart you were mentioning before. We have the short-term holder MVRV on BitcoinMagazinePro.com. But you did share a couple other charts as well, which I did find interesting, especially looking at the current support and resistance levels. And if we just zoom along here, again, we can see the mild and mild overvaluation and undervaluation to the upside and downside of these cycles. So I was wondering, why are you focusing so much on the short-term holder metrics in comparison to something like the long-term holder metrics? Do you think that this is a more accurate and fair reflection of the current market cycle that we're seeing and maybe reacts to the data a little bit faster? Do you still track long-term holder data as well?
Of course I track all the data, but I think short-term holder data is more relevant in terms of price actions because, of course, short-term holders are more susceptible to price action, and so these metrics tend to respond very well to price, more so than long-term holders, which long-term holders tend to hold a lot like independently of price action, and so I just in the chart I showed these support zones. So in 2021 cycle, we many people were expecting prices of 100K and above already. We of course didn't reach them. We only reached the 60, 70K area, and so we built first a kind of a resistance zone there. And with the first move up, like after the ETF approval, we saw of course some retail hype as well in this cycle. We found some resistance at that previous all-time high. Well, we did make a slight new all-time high there, but we kind of consolidated for a long time at that previous all-time high zone from the previous cycle. And so after breaking out with the election and then the move up to the 100K zone, now we found like this 100K resistance there. Obviously, 100K is a very mental zone where as many people were expecting 100K already previous cycle. I think there was a lot of profit taking as well around this 100K area, and it's just like we had actually in the 10K area. We hovered around the 10K for a long time before we eventually broke out. So with the 100K zone, something similar could happen as well. I think it's actually very healthy to consolidate around that area, and we actually broke out slightly above that 100K zone, and so it became kind of now a support zone. It's yet to see if we can hold that support. We might still fall below it slightly, although the short-term holder cost base is catching up and is now right in the middle of that support zone. And so to me, that is very bullish. Looks like we could maybe still have this slight retest to that short-term holder cost basis, and then we could see a next move up. So that's how I kind of look at it from the overvaluation and undervaluation, which you just mentioned before. So far we have seen a very structured move. So we had this mild overvaluation so far, which also caused slightly a mild undervaluation in those downturns. And so I've been using this to kind of also guess where the bottom could potentially be for the recent down move that we had. It was more or less 30% drop from those all-time high levels. Well, if we compare that to 21 cycle, of course, we had a heavy overvaluation and a heavy undervaluation. So the question becomes okay, are we still going to get such a parabolic move up? And, are we going to really see this overextension to the 4 standard deviations? Or, is it going to be more this structured move up? And so, because actually, if we look at the next chart, a structured channel has been forming practically since the 2023, and we've been kind of moving up. And if we one could question is this due to institutional adoption? Are we going to still see the same volatile up move or a parabolic move as we have seen in previous cycles? Of course, nobody can predict the future, but it is true that retail alone, Bitcoin now being at a $2 trillion market cap, it's more difficult for retail to just pump that price up. Now, we did see slight moves to that top part of that channel, and those were both actually formed because of a bit of retail hype in the market. And so maybe we can go to the next chart where I like to use the short-term holder supply metric actually as a proxy for measuring hype in the market. And So, for example, in the 2021 bull market, we saw like this huge spike of hype, in short-term holder supply moving up, and this caused, of course, that parabolic move. Like so far, we have seen two of those spikes with like both the ETF approval and the election pump that we have seen in Bitcoin. They were not as high as, for example, the 2020 bull market. Now, the question is, will we get another one of those hype peaks in this metric? Will hype return? Because usually when hype leaves, it's quite difficult for hype to come back. This is all due to like human psychology, and we'll get a bit more into that with like the cycle analysis. But so far on the downturn, now we have had like a slight bottom pattern there at the end of short-term holder supply, which could potentially signify that maybe it will start turning around, which would be very bullish. So this is one of the metrics I'm kind of wait to unfold how this will turn out. It's still a little early to tell, but it's not to say that without retail hype or without hype in the market, we cannot make higher highs. We did so actually, in fact, on the if you look at the 2021 cycle peak, there was no hype in the market yet. We made an all-time high, which was purely based on long-term holder behavior in the market. And so that is also possible. But of course, when there's hype in the market, room for much higher prices is a lot more evident. And so if we think of that structured channel that we see, we are kind of hovering between the bottom of that channel and the middle of the channel, except for those two spikes that we saw in short-term holder supply. So the hype, when there was some hype in the market, we actually were able to reach the top of that channel, where without hype, we kind of stayed in that lower end of that channel up. And so the question becomes like how much influence can retail still have on the market, and and also is this structure channel really due to institutional adoption, or is it just because of general market structure, or so the question is like, and I've been covering this quite a lot, like passive flows from institutional adoption, and so we maybe can get into some of the institutional flows before we continue. I don't know if you have any questions here so far, or if you have anything to add, Matt.
No, it's all sounding good. I kind of pretty much agree with everything you've said. And then one of the charts that I'm looking is kind of the inverse of the short-term holder supply, being the long-term holder supply, which is, as you said, pretty peculiar to see it making incredibly higher highs during a very bullish phase of the cycle, or seemingly bullish phase of the cycle, where we've now normalized $100,000. And kind of to play it into two different effects, we're seeing not only a lack of retail interest, a lack of FOMO coming into the market in terms of short-term holder supply being gobbled up by new market participants. But it does also seem like we're at the same time seeing less willingness from long-term holders to actually sell and take profit in Bitcoin. Whereas in previous cycles, it's very cyclical. You'd see a huge amount of profit taking towards these new all-time highs as Bitcoin rallied higher. And apart from that double top in 2021, we've not really seen this type of activity and behavior from long-term holders, which, as we've said, may be due to the influence of the institutional adoption and the new accumulation that we're seeing from corporations and stuff. But as you mentioned previously, the passive flows, we'll get into that. So can you explain how these passive flows, what passive flows actually are, and how they're influencing the Bitcoin price?
Yeah, so maybe before we moved into that, just to comment on this long-term holder chart. So we actually, indeed, we had like we're almost at all-time high levels in terms of long-term holder supply, which is not necessarily bullish. It means actually like absence of short-term holders as well, absence of hype in the market, and of course, long-term holders are only willing to sell when price substantially rises, and it has been moving up. Although I do want to comment, like perhaps some of this up move might also have been due to Bitcoin Treasury companies, which we'll get into. But of course, they are adding a lot of supply to their holdings, and much of that might also be marked as long-term holder supply. So the question becomes like, okay, I don't know exactly how much. It's difficult to measure these things, but I do think that could have an impact on that spike in long-term holder supply that we see here. And so what I'm also interested in more so with the short-term holder supply metric, which I showed before, is not so much the absolute measures. It's more like the direction of that supply. Short-term, because like quite some of that short-term holder supply might, even though it's maybe a sailor, for example, is purchasing more Bitcoin, that that all goes directly to like long-term holder supply, even though that's not kind of fair, because it's people buying his stock, which makes him able to buy more Bitcoin. And so in a way, that's like it should be marked as short-term holder. But so some of that institutional supply is perhaps not 100% classified. As the market is becoming more complex, this is very difficult to do. So I think that the direction of short-term holder supply still matters, because there is, for example, Bitwise or so, who provenly has actually proof of reserves, and so we can actually see that supply of Bitwise is marked as short-term holder. And of course, retail hype is also marked as short-term holder. And so still that direction of short-term holder supply is very relevant, more so than the absolute values of supply, in my opinion.
Yeah, 100%. And we're unlikely, I would say, to see this big parabolic blow off top like we did in 2017 until we actually see some more inflows into the market. Although, again, as you mentioned previously, this almost stepping up in price action is probably a lot healthier and more sustainable for significantly higher prices, as Bitcoin can kind of reset expectations at $100,000 and hopefully we can move higher. And it is pretty boring to see the stepping of price action, this big explosive volatile move to the upside or downside before some choppy consolidation. But this is the influence of the institutions. And I do think that, I don't know if you'll agree with this, as more and more institutional capital's flowing in, we are seeing a reduction in the volatility of Bitcoin. But this will probably not just suppress the upside potential of Bitcoin, but it's also likely going to suppress the downside. I don't necessarily think we're going to see big 50, 60, 70, 80% drawdowns in Bitcoin going forward, because as soon as we see kind of a 30, 40% reduction in price, a lot of these institutional market participants will see that as a golden opportunity to buy at a heavily discounted price. So do you agree with that? Do you think that it is going to see this muted volatility in both directions?
Yeah, so I think actually the passive flows from institutional adoption are actually what limit downside volatility. And so, and for example, strategy has been included in the Nasdaq 100, for example. Of course, many institutional portfolio who have a certain allocation to these indexes, they now automatically start putting some of that Bitcoin, some of that money, new capital into Bitcoin. The same for example, pension funds. So if some employee of some company is part of some pension fund that has a portfolio allocation to some of the ETFs, now part of their salary is flowing passively into Bitcoin, each month. And so that is so all those, and we actually, strategies at the verge of maybe being included in the next quarter into the S&P 500. That would be a huge deal, because now we even get a lot more passive flows into Bitcoin, and so that's very optimistic, because there's so much capital, and these passive flows are kind of a constant upward pressure on price, and so they limit this downside volatility. Maybe indeed we have had this structured move up so far, but it's this constant structured bit. But without retail hype, or without like real hype, we could see hype still around Bitcoin Treasury companies, and we'll get into some of those dynamics later. But I think without hype, we might not see those huge parabolic moves, but it will also indeed limit the downside volatility. So in a way, like this upward move is way more sustainable than for example a parabolic move up. If we go to an overvaluation of 4 standard deviations above the short-term holder cost basis, that's if we go up too fast, it's we'll go down hard, 80% drop. Now, so far we haven't had anything like that, and so it's also reasonable to assume to not expect a currently like an 80% drawdown bear market. Even there are some risk factors to a bear market, maybe more so even from macro than from Bitcoin itself, because there's so much macro uncertainty, and currently still recession risks and wars and escalations that could all change the dynamics also of the Bitcoin cycle, because we're so correlated to the stock market as well. So those are more risks, in my opinion, than within Bitcoin itself. And within Bitcoin itself, actually, we have like healthy, sustainable uptrend of adoption, both from the institutional and retail as well continues, although they have less impact due to the big size market cap. But also on a technological front, many developments are happening on second layers. Lightning, eCash, all those things are actually becoming more mature, and so that is really cool to see all. And so I think like Bitcoin also, yeah, even on the regulatory front, we have this pro Bitcoin administration, we have Bitcoin reserve, and it's really getting more mature. Banks are starting to promote Bitcoin as well, or to their clients. And so these are all super important dynamics that are going on, very healthy in the long run, even though we have some like major macro uncertainty still in the short run. Now, the Fed could start printing soon, like more money, and maybe that will be the trigger to have like a parabolic up move. Similar to what we saw after COVID, like the COVID response, we had like huge amounts of money printing, and this caused this major run in stocks and in Bitcoin, of course. We could see something similar as well still in the next months within Bitcoin. But so far, I actually think it's important to realize that this like stable kind of uptrend is actually a good thing, even though it's boring for like the Bitcoiners that are so used to like this major volatility.
Yeah, 100%. And just on the topic of institutions and their influence and impact in accumulation of Bitcoin, you shared a data point that I'll load up on the screen now. Because obviously with the ETFs, they've had a huge positive influence on the amount of price appreciation we've seen in Bitcoin. As soon as we see over 1 million Bitcoin scooped up in a very short period of time, that's obviously going to impact the supply and demand economics of Bitcoin in a very positive way. But we always associate, or people often associate, the ETFs with being direct institutional adoption, where that isn't necessarily the case. So can you walk us through the chat we've loaded up here, talking through the actual institutional adoption and the ETFs and their general impact on the market?
Yeah, here we see actually the combined holdings of all the US ETFs, and we're currently at 1.2 million Bitcoin. We started around that 600,000 that we came from like the GBTC trust, which converted to an ETF as well. So we already started there. But what I've been doing is, I've been kind of gathering all the data from the SEC to see like, okay, how much institutional holdings are there? And this is like a conservative estimate. So the green area of this chart shows like the amount of institutional holdings, but it's a conservative estimate because it only looks at companies that are required to report to the SEC, which is like if you have like more than 100 million in portfolio. And so there's probably many more businesses that are smaller that also have an allocation to the ETFs who are not measured in this measurement. But it does give us some sense of like what are the bigger institutions doing with regards to ETF. And so we see that they got to more or less this 30% in Q4 of 2024 of the ETFs, and in Q1 we kind of slightly moved down a little bit. There was some de-risking, and this was really due to the macro. It was not only in Bitcoin, it was also in stocks, de-risking because of macro escalation and war, etc. And so we went to 27%, but the number of institutions, the total number of institutions allocating to Bitcoin actually still was kind of flat or slightly rising. So even though we had all this escalation in Q1 going on, the number of institutions went still up. But there was some de-risking among slight de-risking among the institutions. Now in Q2 we have been moving up quite a lot in terms of total ETF holdings, although the data for institutional holding is not in yet, so it's shown here flat, but it will likely rise again. I actually expect it to move to like that 30% range or so again, but that data still has to come in, so there's a bit of a delay there. But what we can overall see is that institutional adoption is real. Now it is more or less, maybe like it's a conservative guess, like 27% of the total ETF holdings, because there's of course also a lot of just retail investors that have allocations to stocks who now have a small allocation to these Bitcoin ETFs because they just became a lot more accessible. And so much of that ETFs of the ETF holdings are still likely retail, although this is a conservative estimate.
Yeah, 100%. And what we can see from the next chart here is just the amount of BTC being accumulated by these ETFs is just not really slowing down. I almost had a slight anticipation that after the initial spike, because post ETF launch, we saw this huge run up, and that was positively reflected in the Bitcoin price action. But I thought, especially with some more boring and choppy sideways price action periods, especially even recently, we've spent a very long time just kind of hovering around this $105,000 level. Yet we're still seeing hundreds of millions of dollars a day pouring into these ETFs, even in spite of this, let's be honest, fairly boring price action that we've seen recently, which just shows the demand and the appetite for Bitcoin in spite of all of the uncertainty, in spite of the boring price action, which again, I think just looks incredibly positive and incredibly bullish for Bitcoin and the space in general. But one thing I was wondering and I wanted to get your input on is, have you actually noticed any changes in the on-chain data? Have you noticed any different in trends? I know we've mentioned, of course, that we now maybe have to monitor not just the on-chain data to kind of gauge the influence and the accumulation from these big players and retail players as well. We now have to kind of track the ETFs and other filings. But have you noticed any underlying changes in the data that you can really look at and that we maybe now have to take into account going forward when doing our analysis?
Yeah, so as I said before, so on-chain analysis is actually becoming more complex. As for example, like some of that supply is classified as long-term holder, where in a way it's a new entrance coming into the space in terms of the ETFs, and so this makes it kind of complex to look at the dynamics. So really have to take into consideration those dynamics, and that's why the reason why also I've built an ETF tracker to all track all this kind of data, and as well the institutional adoption, like gathered all this SEC data, because it's like very valuable info on top of what we can see on chain. Now to get back to that ETF flow chart, the most important part of that chart is actually just the average inflow of ETFs. So we're at 1.65 k Bitcoin per day, and so this is 3.5x the new supply issuance. So ETFs have a big impact, and they're just one part. We also have still like a lot of other sources of demand. There's of course just the traditional exchanges, the on-chain data we can see, but there's also a lot of stacking happening in the Bitcoin Treasury companies, which it's a whole nother topic that we'll get into. But just ETFs alone are already like 3.5x on average. Of course, there's a lot of volatility, but 1.65k versus 450,000 Bitcoin per day, 450 Bitcoin per day. Sorry, not thousand. Only 450, like 3.125 BTC per 10 minutes, right, per block. And so that results in 450 Bitcoin per day versus the 1.65K from just these ETFs, which if we think of if we take like the 30% measurement of ETFs, that would, like, it's kind of conservative, but that would be like the institutional part. Then we actually see that institutional parts from just ETFs alone is kind of similar. It would be also around that 450 Bitcoin per day, and so that is kind of similar to the supply issuance. So I still think supply issuance actually has an impact on Bitcoin, if you think of it in those terms, but it's not of course going to be a major impact, but it's still relevant.
Yeah, of course. And in 3 years' time, when we drop down another 50%, it'll be interesting to see, because at some point there's just not going to be enough new Bitcoin mined to fulfill the desires for these institutions and their accumulation. One thing, I've seen this narrative quite a lot recently, is because of this institutional influence and this institutional accumulation and companies like Strategy just buying up hundreds of thousands of Bitcoin, this is maybe gonna, I mean, we spoke to the diminishing volatility previously, but do you think this is also going to potentially lead to lengthening cycles, which I'm seeing a big narrative at the minute, that this cycle isn't going to be a traditional 4-year cycle like we've historically seen, but we're maybe going to extend into 2026 and potentially even beyond that?
Yeah, so yeah, maybe let's get into more like cycle analysis. Indeed, every cycle. I don't know how long have you have exactly been around, Matt, but I've been around since 2016, and people were talking about lengthening, shortening cycles in the 2017 cycle. We were talking about super cycles, in the 2020 cycle, and so you know. Uh, Everyone has always been talking about, this time is different, and but so far the data doesn't really show it yet. Yes, there are some reasons to believe why it could happen. So I'm not denying that we couldn't see a lengthening cycle. It's definitely possible. But if we look at the current cycle here, so for example in this chart we're comparing the cycles from the cycle bottom. So the pink line is actually the current cycle. Well, compare that to the yellow line, which is the 2017 cycle, right? So we had actually, well, it started in 2016, but so we were talking about this structured channel, due to institutions, but look at that length of at the 2016 cycle. We actually had also, there were no institutions back then. That was like a cycle of retail, but that was like still an early phase of the cycle. So there was like just like this slow upward move in 2017 as well, before we saw that huge parabolic move in 2017. And so the question is, will we still get that parabolic move? As I said before, it could be like if the money printer starts going brr, then yeah, maybe. Also, we could get maybe more hype around Bitcoin Treasury companies, which could maybe also be a reason to get like a more parabolic move up. But so far we haven't seen it yet. But I've probably studied cycles more than anyone in Bitcoin, and I've been kind of showing how we have this early stage bull market, which takes more or less like 2 years historically, but in the 2017 cycle also slightly longer. And before we get an expansion phase, it's kind of like a build up, and it all comes down to human psychology, and we'll get into the psychology part in a little bit. But I'm still skeptical about like expecting like this time is different, because we've been talking about that in all previous cycles, lengthening, shortening cycles, super cycles, and it wasn't different. And so because people are bound to this human psychology, and so yes, it is true that we're slightly longer, like in this structured channel, and so I believe this could also continue, because maybe indeed institutional adoption will change this dynamic. So I'm open to the fact that can happen, but I'm not still. I also still think it's possible to get like this parabolic move up to finish this cycle, even though it might be just maybe slightly delayed compared to previous cycles. But yeah, we're talking then about maybe months or so. Now, could we extend all the way into the end of 2026? Yeah, I mean, actually, I hope we do. That would be cool as well. If we continue this like structured move, up, that's way more healthy in terms of adoption than getting the parabolic move. So the parabolic move is exciting because price goes up fast, but it will come down as well, right? So let's realize that.
Yeah, I think you hit the nail on the head there, and being around for a few cycles now, the more things change, the more things seem to stay the same. And of course, I would like to be proven wrong and see Bitcoin have this year-long huge parabolic move to the upside. But realistically, just going on the data, the previous two cycles are our current base case for how this cycle will likely play out. I do think at some point, of course, the 4-year cycle theory is going to come to an end. I think the influence of the halving event is diminishing, given the fact that the circulating supply of Bitcoin is reaching that hard cap of 21 million. So the actual influence of new issuance of Bitcoin coming into the market is being lessened by that halving event. But anything beyond that is, to be honest, just speculation. Everyone can say this is changing this cycle, so of course we're going to see lengthening cycles. But as we can see, up until very recently, we're actually tracking the previous two cycles very closely. We're actually outperforming them until recently. So it just goes to show, like I said, the more things change, the more things stay the same. But one thing that I think you would agree with is probably your most well-known chart and well-known model is the spiral chart, which really does outline Bitcoin's cycles and the likely human psychology and emotions tied to those. So we've got it here. Could you just talk us through exactly what this is showing us for anyone that maybe isn't aware of this?
Yeah, so the Bitcoin spiral chart. If you haven't like studied it, like okay, maybe pause the video and try to like really understand this chart, because it's just really a good chart to show the cyclical behavior of Bitcoin. So we actually started at the top of the chart in 2009, and then we one full rotation in this chart represents a period of 4 years, because Bitcoin has always been moving in the 4-year cycle pattern, and this is due to the human psychology. And so what I try to even combine in this chart, made it into a cheat sheet, which is like trying to use the more famous Wall Street cheat sheet, psychology dynamics, and like try to apply them on Bitcoin. And actually it turns out that works out very well so far. And the exciting part is that we're in one quadrant represents a period of a year, and so we're now 6 months into 2025. And so we're actually really approaching that thrill and euphoria phase. We just came out of kind of an intermission, and so things seem to line up. And so, like from a psychology perspective, if we think about like the whole 4 years of psychology that actually have exactly been playing out, it's like we're about to enter that thrill euphoria phase, which is very exciting. Now, could this time be different due to institutions and maybe high business returning, and maybe like the macro circumstances cause indeed a lengthening cycle? Yeah, it can all happen. And so I'm totally aware of this. This is not to predict like that we must have euphoria in the next 6 months. But historically speaking, that is what happened, and so it's actually a very exciting phase. The next 6 months are not going to be boring in terms of like what's going to happen, because we're going to get more understanding of what will happen to the 4-year cycle. Are really changes happening, yes or no? And so I'm very much looking forward to that. But so far, if we think of the human psychology, and each cycle, the investor types have been different. Like in 2013, it was like more tech savvy people. That in 2017, it was really based on retail hype. Then in 2020, we had like some early institutions come in, like Tesla and Strategy as well, MicroStrategy at the time, and also some retail hype. And this time we have like more institutional adoption. But so far, the pattern has been unchanged. And so that is just something to hold into account. Everyone of course got excited, because like, oh, what if we only got structured like institutional adoption from here on out? Well, I think institutions are still made out of people, and people are again, they have emotions, and so we get back to this human psychology in general. So that is something to think of.
100%. If you actually track the ETF inflows, the chart we looked at previously, against something like the Bitcoin funding rates, you actually see a lot of correlation there to show that even though these institutions, we associate them with being the smart money, we have all of these analysts who can predict the market to a great degree of accuracy, typically, again, still influenced the same as everyone by their own emotions, by their own psychology, by their own outlook on the market. So I think you also actually have a 3D model of this chart, do you not? So we can share that so we can see how this looks in 3D. So the spiral chart we've just seen, but talk us through this.
Yeah, so this is the same spiral chart as we just saw, except I made it come to life a little more in 3D. And what I really tried to do was map this cyclical behavior. So here, the color coding that I use is actually based on like some of the best bottom and top indicators that I could come up with based on on-chain data for Bitcoin. And so the surface area in this chart actually represents kind of a fair price for Bitcoin. And of course, Bitcoin is never really at its fair price. That is because of all the emotions. Like we're either like severely undervalued or overvalued, depending on the phase of the cycle that we're in, based on the emotions that we just saw in that previous chart. But here you can really see like, okay, so we have a period of bull markets which is like these green extensions above that surface, so we're a bit overvalued, and then we move into this bear market where we bottom out. So those red dots, they're all kind of aligning. Those are all the bottoms of the bear markets, and so there are some outliers. For example, here we can actually see the COVID crash, which was a severe outlier, and then also here the blue dots are the halving. So this was actually the fourth halving, and we had an all-time high. So these dark green dots are all-time highs. So we had the first time we had, it was a bit of an exception. We had an all-time high before the halving, and that was of course due to the ETF approval. So there was some retail hype, excessive retail hype for that to happen, and so it was a bit of an outlier. But then since we've moved in that bull market area, and we have been hovering quite above. So currently we are here. This was the last all-time high here that we made on the 22nd of May. We reached that 111K on daily close data. And then since then we have consolidating a little bit. But so as we can see, until the end of the year, which is kind of until these price marks, that would be as I said before, like the thrill and euphoria phase historically, where we made these cycle peaks, which they all come together here. And so the question is, if we start moving, for example, below the surface area soon, that would change the cycle dynamic. We could also, like, if we're really going to stay above the surface in this area, that would be a first, and that would really indicate this change in cycle dynamic, right? And so I think that is beautiful captured by this 3D version of the spiral chart. I don't know if you have any questions here, or it looks a little messy, of course, but it's cool to play around with this. If you go to my platform, you can actually play around with it as well as a paid subscriber. Sorry, I should say that.
I was just also going to suggest anyone who wants to kind of learn more about this, your presentation at Bitcoin Amsterdam 2024, which I think is available somewhere online, was another great introduction for a lot of people who maybe weren't really aware of this, weren't really following Bitcoin cycle theory, weren't really tracking on-chain data. So it is great. I will ask, I don't know if you can tell us all of the details, but exactly what on-chain data metrics are you using for this color scheme?
Yeah. Before getting into that, I think that Amsterdam talk was somewhere here at the end of 2024, I believe. So that was just before that breakout, right? And so I was showing oh yeah, we're gonna have like this whole bullish area here coming up. Will this time be the same? And so far it has. So it's pretty cool to see. So the indicators I use here, they're very important. They're actually based on an on-chain value map that I have as well. If you scroll through my Twitter profile, or you will find some charts with the on-chain value map. But there's two different indicators. One is, I use mainly for the bottom indicator, which is more based on coin days destroyed. So as coins move on chain, they build up coin days. If they don't move, they build up coin days. And so as soon as they move, those days get destroyed. Because we can actually track the age of coins. And so one bottom indicator, and that was actually originally an indicator from Willy Woo. It's a way to use this on-chain data for an on-chain for a bottom indicator of where could bottoms of the bear market be. And so it has been very accurate. Because that indicator has been around for a long time, and it predicted the previous 2022 bear market very well. And so for the top indicator, I actually use a whole different approach, which is actually based on available supply and capital inflows into Bitcoin that we can see on chain. And so we actually see if all that capital, if that available supply gets saturated, that marks like the top of the cycle. And if we so the on-chain value map has so far done a very good job of highlighting these zones, and therefore I've used that as well, that same valuation in this 3D version.
Yeah, so great. Thanks for giving us some details on that. And one thing, we've mentioned it a few times, but I'd like to hear a little bit more about it. So the corporate accumulation that we're seeing, the strategies buying hundreds of thousands of Bitcoin, the meta planets buying tens of thousands of Bitcoin. How do you think this is actually impacting the supply and demand economics of Bitcoin if that Bitcoin is never really seen again, if it never hits the open market again, which Saylor is saying this Bitcoin is to never be moved? Do you think that this is a net positive for Bitcoin? Do you think treasury companies, it's a cheat code for free money? Do you think that they're a positive on the market in general? Or do you maybe think that this could be something that could maybe get out of hand? It isn't necessarily a suitable strategy for every single company wanting to massively inflate their share price.
Yeah, so I was very skeptical of Bitcoin treasury companies before because it felt a lot like, words like yield. They just, yield on Bitcoin especially is just, it's almost impossible. And so we saw that in the 2022 bear market, where all the crypto companies fell over. And I actually have a chart on this. Maybe you can pull that one up. So in 2022 bear market, we had all these companies like FTX, who was gambling literally with user funds, but also Terra, Luna, Celsius. Celsius or BlockFi, who were like promising, like, for example, a 6% yield on your BTC, right? But how were they doing that? Yeah, they were like basically gambling with with your funds, trying to outperform Bitcoin. Maybe through altcoin allocations and so forth. And of course, this was very dangerous. And so we have indeed this meme. So I came up with this meme because it took me some time to get around, to understand the Bitcoin treasury companies, because I was so skeptical because of the 2022 bear market, like that. I thought, no, anything that has to do with yield is likely like a bit of a scam, and it's probably going to be too risky. And I'm not saying that no one should try and do leverage on Bitcoin or so. I think that is perfectly fine, but there's a big risk involved, right? But it took me some time to understand the fundamental risk of Bitcoin treasury companies and their play. And they actually, and this is, I mean, credit to Saylor, a very intelligent guy, who came up with this Bitcoin strategy, because it's really, it comes down to fundamentals. That's why I made that meme. Like, where's the yield come from? Where does the yield come from? That was the question we would ask in the 2022 bear market. But in case of the Bitcoin strategy company, it actually comes due to money printing. And so essentially, the play of Bitcoin treasury companies, the strategy they have is, they're betting just on fiat money to go down and Bitcoin to go up. And from a fundamental perspective, indeed, Bitcoin is scarce, hard money, where fiat will be inflated to infinity. And we see on average that for the better currencies, we have an inflation rate of around 7-8% or so. Some other currencies even higher, 10-14% or so, depending on where you live. But so the purchasing power of your money will go down. As for debt, the whole fiat system is debt based because it all comes down to incentives. So if I take out debt today, that money is more valuable than in the future. And so my debt will get inflated away as well. And so if we think of a 7% inflation rate, what it actually means, you have the rule of 70. I don't know if you're familiar with that one, but that means that the half-life basically of the value is 10 years for you take the inflation rate, so in this time 7, and you take the number 70 and you divide it by the inflation rate. So 70 divided by 7 is 10 years. So the half-life of your value is 10 years. So that means that if you take out a loan today, and of course you're going to pay an interest on that, but if that interest is lower than the inflation rate, it's worth to take maximum debt. And so in a way, this is what Bitcoin treasury companies are doing. They're taking out cheap debt, and that debt will be inflated away. So in 10 years, that's only half of the purchasing power left of that debt. And then if you take the bet that Bitcoin goes up, and on average it has, of course, it moves into cyclical behavior, which is also the risk of these Bitcoin treasury companies, right? Like like if we get into a severe bear market, can these Bitcoin treasury companies sustain? Because they still have to, they own money to, for example, they have fixed income products, and so they own like a yield, like also in bear markets, like so. But I mean, that's their strategy, right? That is their business model. So they of course should have this 80% drop in Bitcoin. Have that should be calculated in their business model, right? And so, but actually, I believe it's sustainable because fiat will inflate away and Bitcoin will go up in value. And so, if you think Bitcoin will go up at least 20% per year. It has, of course, historically moved up a lot more. But on average, if you think like it goes 20% up per year, why wouldn't you take out debt and buy Bitcoin today, and then you can pay back that debt more easily in the future, right? And this is sustainable because fiat will be inflated to infinity. And so it took me some time to wrap my head around it and figure out that actually this is a way to have the speculative attack on fiat currencies, where we can now provide a leverage bet on Bitcoin. So you can actually generate Bitcoin yield due to the speculative attack and money printing in fiat, which for me was kind of a bit of like, again, one of those mind-blowing moments, because like fundamentally it's sustainable because of the fundamental differences in the systems. Now, of course, you can have like all kinds of smaller companies, maybe they're going to take on more risky bets, and so well, you have to see how that plays out. But if I mean, I've studied mainly strategy or Metaplanet and maybe the blockchain group in Europe. I mean, I've met Alexander Lizet from the blockchain group in Europe. We were in a panel together in Prague, and the guy is super humble, and he is a very smart, intelligent guy. He doesn't want to screw anyone, and so I think that it's gonna, like, also Dylan. I mean, Dylan is super humble, intelligent guy. He's not only after money, or he's not even after the money. He really wants Bitcoin to succeed, and so it's more like almost an ideal that he's going after. And same for Saylor. Saylor, I mean, if Saylor follows me on Twitter, but I don't know him personally. But he seems. Bitcoin gave him new purpose in life, right? He's looking for a change of dynasty. He's not after the money, so that is, and I actually analyzed a bit of like the risk for example, strategy. And they don't even have a liquidation price. There's no margin call for strategy, right? So even if Bitcoin drops tomorrow 40%, there are no margin calls. He can survive that. So Saylor, the liquidation price that I could come up with for strategy is even below 20K. So and if we think of the realized price, so the average purchase price coming from on-chain data is already at 47.5K or so today. So the chance that we will go below 20K is super low. It's almost negligible, and so it's So I think many of these companies will survive. It's nothing similar of the kind that we saw in 2022 in the bear market, that whole cascade of events. Now, could it change? Could we get more risky companies into the Bitcoin Treasury space? That could be, that like maybe we'll get like hype in that market, and they're going to take more and more risky bets, and maybe that will cause a bull market with a big crash, But so far, I think the bigger names like Strategy, Metaplanet, the blockchain group, I think they're going to be safe during some prolonged Bitcoin bear market. Sorry for the
100%.
long rant, by the way.
No, that was great. I completely agree. But one thing that I think a lot of people struggle to really wrap their head around, and it is a pretty complex topic to discuss, but it's the different derivatives that strategy are offering, if you want to call them, different products, different ways to try and extract liquidity from existing markets and asset classes, for example, Strike and Strife. Are you able to give us a little bit of insight into those products and how they could also be a net benefit, not just for Strategy's accumulation of Bitcoin, but potentially the Bitcoin market in general?
Yeah, so Bitcoin Treasury companies have a lot of different products that they offer, and every company is a little bit different. So I've mainly looked into strategy most, but Metaplan is doing similar types of things, and the blockchain group has, again, some different set of products. But the interesting thing about strategy is like really indeed the products like Strive and Strike and Stride, which they came up with, which are preferred stock offerings. So so we have the common stock, which is MSTR, which is basically the leverage bet on Bitcoin, right? But not everyone wants to have like this full risk exposure of MSTR, the common stock, and so there's many companies or institutions in the world that actually, they buy government bonds, right? Because many need to, due to regulatory rules that and regulations that there are. They need to allocate so much percent to like government bonds and so forth. So we have all these kind of like silly rules, made up by governments that institutions should hold a certain amount of their government bonds, so they need to have this fixed income products. So for example, a government bond will provide a certain amount of yield, and so what basically Strategy has done, they have come up with these products like Strife and Strike, which really target the bond market. So what they're trying to do is like, okay, you want to have a 10% yield, I'll give you, buy, Strive or Strike. I'll give you a 10 or 8% yield, which actually is better than the yield that they would get on a 10-year bond. And so it incentivizes those companies to buy those products of Strategy. And so what? And credit to this chart here, Jesse Myers from onceinaSpecies.com. He came up with anyway this chart, the total global asset value. There's 900 trillion of value in the world, and that's kind of like divided in the way it's shown in this chart. So we have nearly 400 trillion in real estate. Like the bond market is a 300 trillion market, and Bitcoin is only at 2 trillion here, right? And so what Strategy has done is with this, it's kind of like a transformer to kind of attract that capital from the bond market and put it into Bitcoin, because he's gonna take he's gonna offer that 10% fixed income product to the bond market, and which actually is a better yield than they would get on a 10-year bond, and then so they're actually incentivized to put that money into Strategy, and Strategy then buys Bitcoin with it, and so and is able to pay that yield because the value of Bitcoin will go up, and so and as I said, this sounds like maybe like a little bit like Ponzi like or so. That's why I initially was as well skeptical, but it really comes down to fundamentals. Bitcoin is a scarce asset, deflationary. Fiat is inflationary, and so that's why he's able to do this. And so I think it's an incredible opportunity, a way to attract all that capital of the bond market, dematerialize that whole market, and let that flow into Bitcoin. So I expect over the years much of that capital to flow into Bitcoin. Now, of course, there's some risk. I mean, yes, Strategy needs to survive these bear markets, and but as I said, the liquidation price is so low that I don't see. Also, I don't see really an 80% bear market happening at this point. We already talked about it a bit before, but we haven't seen that overvaluation like parabolic move up as in previous bull markets. So it's also unlikely, and especially combining that with these passive flows into Bitcoin, having this upward pressure, not only from treasury companies, but also from ETFs and just the institutional adoption there. It looks like an incredible outlook for me for Bitcoin in the long run.
Well, given the fact that we're closing in on an hour and we're talking about the possibilities of Bitcoin's upwards trajectory, I know everyone hates to answer it, but do you have any kind of expectation or prediction of maybe how high Bitcoin's price could be at the tail end of this cycle, or maybe in like a decade's time? Do you have any kind of expectations of flipping gold at any point? I'm curious to hear your outlook on this.
Well, I mean, I definitely think Bitcoin will flip gold at some point, but that is still something for the next cycle, or even the cycle after that. I still remain conservative. We have seen this structured channel that we've talked about that could continue. It could also extend the cycle. We could also we can still go into recession that could delay things. Like, so from a macro standpoint of view, maybe macro will keep us in the 4-year cycle. Like I don't know how exactly things will play out, but I try to keep my estimates conservative. I've always said, like, for this cycle, I think like the 240K range would kind of be the highest point I would see it go. So I expect anything between 140 and 240, which is a big range, I know, but it depends a bit on like the overextensions that we would potentially see, like in the metrics. So I cannot predict like how high we can go exactly, but I don't think we're gonna cross like 500,000 Bitcoin this cycle. I think that is still further out, and so I'm patient. But I think what's way more important than just like a price prediction, I think the fundamental developments technologically from Bitcoin, on the regulatory front, like pro Bitcoin governments, with like banks now becoming pro Bitcoin and promoting it. We have already BlackRock ETFs. Measurable institutional adoption is here. All these factors are incredibly bullish for Bitcoin in the time to come. And so I'm just sitting here patiently observing what Bitcoin is going to do. And yeah, if we get an overextensions that's a little too fast, too high, that could be a potential cycle peak at some point. We'll have to look at the metrics. But so far, for example, in those top indicators that I showed before, like from in the 3D spiral chart, so it's based on the on-chain value map, which is actually based on active supply, so available supply for trade on chain. And then we also look at the capital inflows into Bitcoin. We have reached like overvalue levels, but not heavy overvalue levels. So if we start reaching heavy overvalue levels there, yeah, that would for me like be a top signal or so. But we haven't yet, and so I'm still patiently waiting for that.
Yeah, pretty much exactly what I say. It's better to be reactive rather than predictive. And if we're at 140k or 240k, if everything starts flashing red, then it's probably not a bad opportunity to maybe lock in a little bit of profit. So just as we wrap up, because we're pretty much at around an hour, do you have any final advice or anything you'd like to tell our audience?
Well, definitely check out Bitcoin Magazine Pro. It's a very good channel, and Matt, you've been doing a good job with all the charts. And I definitely treat you as a colleague, right? We're all in this together. It's the Bitcoin journey that we're after, and yeah, check out Bitcoin Magazine Pro. Maybe also check out my channel.
100%.
You can find me on Noster and Twitter as The Rational Root. I go by the carrot. I remain anonymous because because of the expectations on the upside of Bitcoin. And so I try to be. It also keeps me humble in real life, right? And so there's many reasons. But yeah, it looks a little silly with the carrot on the camera every time I have to do it. So. No, thanks so much, Matt. I think we covered a lot of important points in this talk. Thank you so much for having me on, and I look forward to be here sometime in the future again.
Of course, 100% we'll do this again. And I'll link everything down below so everyone can find your channels. But yeah, just once again, I'd like to say thanks for joining me today. And I hope our audience enjoyed this little discussion. And yeah, let's see what Bitcoin can do over the coming months and potentially years. So thank you all very much for watching, and I'll see you in the next one.